Bitcoin has seen a short-term pullback from 28,400 to 27,500. Is this the start of a higher time frame rejection? Let's get into the video and find out. Okay guys, welcome back to the channel. Thank you for tuning into today's video. Bitcoin has broken down from the $28,000 to $30,000 resistance on the smaller time frame, losing the $28,000 mark, moving down into the mid 27,000 range. In today's video, we're going to go ahead and discuss the short-term price action, what this could potentially mean for the macro, and have we seen a higher time frame rejection? Let's go ahead guys and get into today's video. Now before we do, smash the like button, hit the comment button, and of course guys, subscribe to the channel. We do daily videos on Bitcoin, focusing on the price action, the data, the technicals, the price structure, and so much more. No bullshit, no shilling, no emotions, pure hard facts. You can also find us on Telegram, guys. If you want more information, it will be the second link down below. You'll get charts, you'll get updates, you'll get analysis, you'll get videos, you'll get information, educational posts, news events, heaps of stuff. There is so much content in here, guys. Takes 2 seconds. Go ahead and join up. You will not regret it. If you're interested in the VIP channel, you can go ahead and contact me via this message. You can see all of our trades in the VIP. We have specific entries, specific stop losses, specific targets. Everything is laid out for you guys. Some massive profits in the last 24 hours on ADA, BTC, ICP, huge short profits. Along with that, you'll get access to 4 chats, the general chat, the trading chat, and a help chat, and of course exclusive videos in here as well. So go ahead and contact me. Our entire trading track record can be found in that free channel if you go ahead and click up here to the information. You can also sign up to Bitget if you want to support the channel for 15% off your trading fees. Let's get into a video, guys. We'll be talking about the market data to start off with. January was really bullish. February was pretty March, amazing, and now we're in April. 2.3% down for the month currently. We're up 35.24% currently on the 24-hour volume, and we're up 136% on liquidations in the last 24 hours. A lot of those liquidations coming from, you guess it, over leveraged longs. These people got stopped out. We've seen a lot of longs stopped out in the last 24 hours. Excuse me 1 second, guys. I just want to go ahead and take a quick profit on this trade. Let me just take $574. I will take that. Thank you very much. Okay, let's get back into the video, guys. Sorry for what, 1 second. 346%. There's all the sound. There's all the sound going off. 3.46% on the volatility index on the 30-day period, and we're looking at 3.13% on the 60-day period here. Volatility is starting to plateau. We talked about that in yesterday's video. We discussed how volatility decreasing, volatility plateauing is a sign of weakness in the trend. We discussed in yesterday's video how price action has a few different components: momentum, velocity, volume, and liquidity. When we start to see those 4 things drop at resistance after a large move, it's a great indication that we are going to see a rejection. We're discussing that in yesterday's video, and since then we have seen Bitcoin drop around 5-ish%, and we have seen a decent pullback, a pullback that we copped some massive profits on the short time frame. But let's go ahead and talk about DXY and traditional markets, and then we'll get into Bitcoin. The DXY is doing exactly as we anticipated, right? It's working out perfectly. It's really nice to see. We're seeing a rally from the breakdown point, okay, which was over here. We saw a nice support retest of our horizontal support zone, which we anticipated. We expected a bounce and breakout of the descending channel, which we have seen. Our targets are now 103.3 to 103.5. Making some really good headway towards that level, and we could potentially see that level hit this week. As we said already, guys, if the DXY breaks up and moves up, expect the stock market to drop. Expect Bitcoin to also come down, guys. They are inversely correlated. Although the correlation over the last few months has been spreading out a little bit, they still do have a degree of correlation that is substantial and something to definitely consider. So we are watching the DXY as we approach these major points of contention. Looking at the S&P 500 and Dow Jones, we can see the Dow Jones has bounced from support over here, again retesting a local high. Every single local high is going to be acting as resistance as we are pushing up from what was a downtrend. So we're looking at this point over here to act as a resistance. We're looking at these top points over here to act as a resistance. And the key levels we need to break above is, of course, 35,000. That is a key level we need to break above to see any sort of higher time frame bullish price action. Looking at the Dow Jones over here, guys, we've broken up through a major neckline, pushing into this range over here. This is kind of the no man's land, is all I like to call it. It's between a major trigger long and obviously a major support. So anywhere between this point, we could find some fluctuations in price, some consolidation, maybe even some rejections, but we're not looking for any high time frame swings until this level breaks, and more importantly, this upper level breaks. Until then, guys, we are actually bouncing between a major chunk of resistance and support. We are just bouncing between on the higher time frames, massive higher time frame swings. We don't have monthly directions. We don't have weekly directions yet until one of these trend lines, one of these horizontal resistance or supports actually breaks. Okay, guys, let's get into Bitcoin now. Let's talk about the price action, guys. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Because a lot is happening, and as you have seen, Bitcoin has fallen out of the 28 to 30,000 range. I'm going to keep today's video a little bit shorter because I don't have a lot of time today and I started filming a little late, so forgive me for that. But as we were saying, guys, we can see that the overall trend is of course up, right? We have an overall uptrend. But what we've noticed with this uptrend for quite some time now is that the uptrend has been significantly weakening. We have a bearish divergence here of momentum, signifying, of course, that momentum is falling down, it's pushing down. We have a downtrending momentum, we have an uptrending price. A really easy way you can go ahead and do it is if you take the line and draw an arrow with it, you can see an overall uptrend. We have an overall uptrend over here, okay? And we have an overall downtrend. So we have a discrepancy between the momentum and the price action. And as we said yesterday, for price action to develop, for price action to move, we need momentum, okay? Velocity, volume, and liquidity. Those are the things we kind of need. Volume, liquidity, momentum, all these different components of price action kind of come together and they determine whether or not we move up or whether or not we move down. And when we start to see these key leading indicators, such as momentum, okay, such as volatility, such as liquidity, such as volume start to drop while we are at resistance, the probabilities of a break upwards diminish. And trading is all about probabilities, guys. Probabilities. The statistical probability is your friend. Find a statistical probability, position yourself with it, and you're more likely to profit. If you're trading against the trend, if you're trading against the probabilities, you are going to find your profits are going to be smaller, your losses are going to be larger, and your win rate is going to be smaller. You're going to be an unprofitable trader. Looking at the leading data, we can see marker cipher B, again, suggesting we have lower red dot confluences over here. We have congregations of higher red dots over here, again, suggesting overall momentum is down. We've seen periods of negative momentum. We have periods of positive momentum. But what we are seeing here now on the daily is momentum is starting to weaken again. We are seeing momentum is weakening. We have lower highs on the RSI over here. We have red dots printing on the marker cipher B. We have weakness in momentum. Now, of course, this is a daily chart, and we have seen a significant drop down of about 4% on the daily candle over here. So we do need to take a look at the shorter time frame, but as opposed to the higher time frame. Looking at the higher time frame here, everything remains the same, right? We are seeing weakness in the trend. We are at a macro resistance level, and we'll come over that in a second. The 28 to 30,000 resistance is a significant resistance. It represents the yearly low of the prior bull run cycle, the yearly low of support, okay? So for us to see any sort of uptrend develop on a higher time frame, and this isn't me being bearish, this is me being a purely objective, purely factual, purely data-driven analysis. We do need to see a monthly candle close above 28 to 30,000, and we can support that with historical data, which we'll do in a second. But going back to the price action, guys, what we saw was a huge bear market. We saw a huge bear market in terms of percentage drawdown, in terms of time. We saw the bear market extend this downtrending line. This was, of course, our descending channel. This is our bear market. We saw a consolidation at the end of a downtrend, okay, in the form of a falling wedge. A falling wedge is a bullish reversal structure. We turned bullish in this zone here. We have been bullish ever since. We have been bullish for a reversal. We have caught this entire move up. We have profited the entire way in both shorts, in both spot longs, and of course in scalp longs. However, we are at resistance now, and it is completely ignorant. It is completely blind to suggest that we are going to break through 30,000 right away without even considering the possibility of a rejection. And that is what technical analysis is about. That is what trading is about. It is about identifying the possible outcomes, applying your analysis, your context, and your narrative to then assign probabilities and then take action based on your risk return and your risk tolerance on those probabilities to make an overall profit. That is all it is about. That is what we are doing here, guys. So let's take a look at the 30 to 28,000 resistance. Why is it significant? Then we'll get into the short-term price action. Then we'll come back and do a technical analysis to finish off the video and discuss where the next moves are and what zones we're looking at. So for the new viewers, guys, you're probably wondering, okay, what is this guy on about? And either the new viewers either most likely have a bullish narrative or most likely have a perma-bearish narrative. Most people have bullish or bearish narratives, and I would like to stress, if you're on this channel, if you're watching this content, the first step to profits is to drop the versus game. Drop bull versus bear. Drop narratives. Drop I'm a bull, I'm a bear. Get rid of it. Eliminate it. It's not going to help you. Forget about it. Okay? There is only facts. There's only data. There's only probabilities. And only you can determine whether you profit, not whether you want the market to move up as you're bullish or you want it to move down as you're bearish. It doesn't care. The market does not care what you think. It doesn't care about your emotions. Having emotions and preferences will get you wrecked, okay? Focus on the chart. So what are the charts saying? We are at resistance. 28 to 30K is resistance. We do need to break above it, and we can prove that. If we look at prior cycles, if we look at the prior lows in last bull runs, every single time, guys, we break a monthly candle above the prior bull run support on the yearly chart, monthly chart, we never see a monthly candle close back below it. Even COVID crash closed above it, okay? So going off the assumption that this yearly base support of the prior cycle, which is a 2021 cycle, is as significant as the prior cycles, we can then say with historical evidence that a monthly candle above 30,000 is going to trigger a monthly uptrend for the price action, which will then eventually develop into a bull run. Remember, a bull run will start according to the 4-year cycle from 8 March to April 2024 and above $48,000. That is when the bull run is going to kick off. We are in a macro uptrend from then. If we look at the last bottoms to the point at which bull run start, we saw 216%. Okay, from the bottom to the bull run start, we saw 311%. There is absolutely no reason why we can't see a significant rally of 200% in this instance before we actually technically enter a bull run. So a lot of people are saying we're in a bull run because we went up 50%. No, we are not in a bull run. What we have seen is a macro reversal after a macro 14-month-long downtrend, okay? The longer the downtrend, the larger the bounce, okay? Now, I do believe we will remain in a uptrend. I do not believe we're going to see new lows. However, it is possible, okay? I don't believe we're going to see new lows based on the data we have, based on the charts we have, based on our support zones, our volume ranges, and our historical data, but it is possible to see so, and there are triggers that could cause that, which will come out as curveballs to the market, and we can discuss that in another video. But let's go ahead now and talk about the short-term price action, and then we'll come back and do a technical analysis. So as we can see, guys, we can see Bitcoin over here. This is our major higher time frame range. I put HTF, high time frame bullish, high time frame bearish, okay? Now, you're wondering what is going on here, what's this chart all about? Well, we're in a horizontal consolidation. This right over here, if I zoom up on it, this is a horizontal consolidation, right? It means the price is bouncing as consolidation between two major trigger points. We have a higher time frame trigger for the bullish, and we have a higher time frame trigger for the bearish. Meaning, in this range here, we expect prices to bounce. Above this range, we can see, according to the VRPV, that our volume range drops off significant. Historical orders, market orders, historical trading orders significantly reduces. What does that mean? Well, it means it is easier for the price to move more volatile and faster when it gets above 28.8K. That could facilitate a move towards that $30,000 resistance, the upper range of the $30,000 resistance, okay? Looking at the downside, guys, if we break, and we'll come talk about the very short term in a second, if we break below the higher time frame bearish trigger, we can expect exactly the same thing to happen. Look at the volume range. We significantly drop off. We have some minor support around 26,000. Besides that, the volume range has dropped down. The next chunk of support is 25.2 to 24.4 as per the local tops we developed right over here of the falling wedge and right over here before 20 crash, okay? Significant support levels. These ranges aren't random. It is all based off price action or driven from price action. So let's take a look, guys, at what will happen. If we drop below this level, we're going to see a continuation downwards to retest 26 to 25.2 to 24.4. If we break above this level, we could see anything from around 29,100 to 30,000. Now, even if we break up here, that doesn't mean we have broken the resistance. We would still be within this resistance. So the resistance to break, since it is a yearly long resistance, we need a monthly candle close to confirm, okay? Until we get a monthly candle close to confirm, the resistance has not broken on higher time frame. It can break on the short term, but higher time frame hasn't. That is what we're waiting for, okay? Since the short term right over here is not a monthly or yearly long resistance, in fact, on this instance, we're going to look for the time frame of which we see only wicks below, 4 hour, okay? A 4 hour close below 26,800 will confirm the breakdown / loss of this level. Let's take a look at the technicals now. As we can see on the smaller time frame, guys, if we go back to the hourly chart, we had some nice shorts plays up around this level. If you're in the VIP channel, you would know we took shorts around this level last night. We profited this whole way down over like 50-60% profit. We took a bunch of shorts, massive profits on the way down. Again, we know we are looking to take shorts while we are at these resistance levels. Why would we be taking longs when the risk return on a long right over here is quite literally, okay, negative like 60%? If we take it from the top to bottom, okay? Your shorts are significantly more favorable in terms of risk return when you take them, okay, at resistances targeting these lows. We have a 4-to-1 risk return. That is a more probable scenario. That is not only a more probable scenario, but it's a more profitable scenario. That is what we're looking for. That is what we took. For the short term, we have seen a breakdown of a major uptrending resistance level here on the RSI. This over here suggested a shift in momentum. We saw a shift in momentum here. After we saw that shift in momentum, we saw the price action drop. If we take a horizontal line, guys, vertical line from these points, we can see, where do we see the shift? We saw it here. What was it? 4 hours after we saw a breakdown in momentum, we saw the price breakdown. If we look at the price action over here, we saw a retest, a rejection, support resistance flip. 1 hour after we had that, we saw the price break down. And that is what I call a leading indicator. That's what I've been stressing. Momentum indicators are by far and large the most significant important indicators when doing technical analysis, as they are leading indicators that can predict where the price is going before the price even moves. They give you leading data on what the price is doing and what the trend is looking like. And you can use that data to create a narrative based on the overall higher time frame structures, economic environment, yada, 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 to then predict where the price is more likely to move and then position yourself based on the likelihood of those probabilities. Looking at the short-term price action, 4 hour, we can see we have lost the 50 EMA. Weakness. This is a red bell. It's an alarm bell. This is a warning. Big alarm bells going off. We are losing the strength in this trend. There's confirmation now, losing the 50 EMA. Strength of trend is dropping. We can see the RSI is falling. All right, not looking very good. We have a decent amount of support over here as represented by this level here. A loss of this lower support level here will trigger the next move downwards. If we want to see a move down to 27,000, we do have to lose 27,500. Until then, we have a possibility of a short-term bounce all the way back up to retest these levels, guys, okay? So keep your eyes on the charts. There's no confirmation yet for higher time frame moves or short-term moves. The short-term bearish move has been complete. If you're in the channel, you would have caught that. The next move right now, again, we look at probabilities. We look at what we're doing. The most likely likely scenario is still down on the higher time frame, as the higher time frame suggests that on the 4 hour. But in terms of risk return, I wouldn't be taking shorts right over here because we have a significant support right here. You're better off waiting for this to break and then look for shorts, maybe a breakdown on a retest, then short towards this level, then taking shorts here where you have a very small possible window of return and a very large window of risk. Okay guys, let's get back to the higher time frame, run through a final analysis, and then end off the video. Hope you're enjoying so far, guys. Smash the like button, hit the comment button. Obviously, support the channel, guys, by joining up on Bitget, and of course, sign up to VIP. You will not miss a move, and you'll profit the entire way if you follow what we do. So, we're going over momentum indicators. Let's take a look at some higher time frame indicators. Gaussian channel on the 7-day, guys. This is another really significant one I was talking about. We have seen a 7-day. Actually, I want to take a look at this one. This is a better chart for it. This is a significant one. We got two indicators I want to talk about really quickly. We have the Bollinger Bands, okay, and the Gaussian channel. We can see some convergence right over here. Look at Apex right over here. This is rare to see. We see very, very rare when we see the price Apex and kind of converge between the upper band of the Bollinger Bands and the midline of the market size B. This is usually a warning sign for a volatile move to come, whether it be a volatile move up or a volatile move down. Okay, we don't generally see this. A loss of the midline on the Gaussian channel will move the price all the way back down to retest these highs over here. Okay, there's likely a scenario. Watching the weekly candle close. The weekly candle close above this midline, we could see a drag upwards. Now, do keep in mind, this chart is delayed by 24 hours. The current price of Bitcoin is 27,600. 27,600, in fact, is right on that midline. We are currently retesting the midline on the Gaussian channel as we speak. Okay, watch it for the next move on the higher time frame. Overall trend is looking good on the higher time frame, but we are at macro resistance, and as you would know, leading indicators are more beneficial than lagging indicators. What we can look at now is structures. What are the structures suggesting? Technical indicators are absolutely useless now to predict the next move on the higher time frame. Look at structures. What we have from a structure analysis is a resistance. Therefore, rejection is possible. Okay, when we break over that, then we can assess the strength of a trend on the higher time frame. Short term, we have our triggers, we have our zones. Watch them, study them, pay attention to them. Do not complain you missed the next move because you were bearish, you were bullish. Ignore your emotions. Emotions will do nothing but hurt you. Focus on the charts, study the technicals, study the price action. If you want to learn how to do all that, join the Crypto Academy. We teach you 10 units, everything you need to know. If you're a beginner, if you've been trading for about a year, if you've got about a year of technical analysis experience, or you're brand new to trading, this is what you want to be, guys. We teach you from the base. It is easier to teach someone how to do something correctly from the start than after 2 years of failure, then bring them back, unteach them all the wrong mistakes, unteach them all the bad lessons, and reteach them the correct ones. Learn how to do it from the start, and your success will be accelerated. I'm going to see you guys tomorrow. Hope you have a great day.